looking at a head and shoulders pattern, it's easy to see why the pattern is named as such, as pointing it out shows that there are three peaks in this case in a bullish head and shoulders, but it should also be noted that there are inverse head and shoulders which are essentially shaped like this. Exact same thing, but upside down. The shoulders are on either side of the head, so you can see that since the shoulders are lower than the head, it does look like a head and shoulders. And there is also what is known as the neckline, which is just simply where the pattern starts in the beginning. You can see that we go through, we find support, we go through, we find support, we keep moving up, and then we break through that support. The head and shoulders pattern also features a built-in measuring stick in the sense that you can measure from the top to the bottom, and that is your projected move, and you can see that you just about matched it pip for pip on this breakdown. Quite common. But when you look at the head and shoulders, it's important to understand the psychology of it. For example, in this particular example, you can see that the bulls had definitely taken control and started pushing the currency pair up. This had been going on for a while, and then once they got to this pullback, it's to be expected in the trading world. The markets don't go in one direction forever. It pulls back, and the bulls maybe throw another trade on, or perhaps people who weren't originally involved want to get involved, and they see that the price goes up to here and pulls back. Again, not something that's out of the ordinary or would cause concern as it falls back down. But what should be noted is as the bulls came back in and tried to push prices higher, they failed to make a new high. Remember, a trend by its very definition is higher highs or lower lows, for example. And once you change the higher highs to a lower high, you are starting to possibly break the trend. Now that this neckline is drawn, you can see how this plays out. The buyers get involved, and once the new buyers come in at this point, they make a little bit of money. And once the new buyers come in at this point, they realize that they're in trouble as price starts to fall against them. Once this breaks down, the buyers in this entire pattern are now losing money. And in order to get out of this losing trade, they are selling. They have to reverse their positions, which of course just accelerates the selling anyways, because you have the sellers as well, plus the buyers who are now flipping over to sell. Again, this pattern can be an inverse head and shoulders, which would look something like this on a line graph with the headline, or with the neckline. As you can see, the shoulders there, and there's the head. Works the exact same way, but in opposite. It breaks to the upside. So you get a head and shoulders at the top of a bullish move, which is a bearish signal because it is a trend change signal. And then you get the inverse head and shoulders at the bottom of a bearish move, which is a bullish signal as it is inverse.